Welcome back to our channel, where we bring you all the latest insights and information. In today's video, we're going to delve into a topic that affects every Australian taxpayer: GST tax. Have you ever wondered how it works and why it was introduced? Well, you've come to the right place. Let's get started. Before we dive into the details, let's start with the basics. What exactly is GST? GST, or Goods and Services Tax, is a broad-based consumption tax imposed on most goods and services in Australia. It's set at a rate of 10% and is included in the final price consumers pay for goods and services. So, how does GST work? Well, every time a business makes a sale of goods or services, they collect GST from their customers. This collected GST is then remitted to the Australian Taxation Office, ATO, periodically. But what about input tax credits? Good question. Businesses can claim a credit for the GST they paid on their business purchases, also known as input tax credits. This means that businesses only need to pay the difference between the GST collected from their customers and the GST they paid on their business expenses. Now, let's talk about why GST was introduced in Australia. The Goods and Services Tax was implemented on July 1, 2000, as a replacement for the outdated wholesale sales tax. The introduction of GST aimed to simplify the taxation system, promote fairness, and provide a stable revenue source for the government. By broadening the tax base to include a wide range of goods and services, the government could reduce reliance on income tax and other indirect taxes. This shift allowed for a more equitable distribution of the tax burden across the population, with those who consume more paying a proportionate amount of tax. Additionally, GST brought Australia's taxation system in line with international standards, making it more compatible with global trade practices. This helped facilitate trade agreements and boosted the country's economic competitiveness on the international stage. Since its introduction, GST has played a crucial role in generating revenue for the government, which is then used to fund essential services such as healthcare, education, and infrastructure development. So, there you have it. The Goods and Services Tax, or GST, is a key component of Australia's taxation system. It works by levying a 10% tax on most goods and services, collected by businesses and remitted to the Australian Taxation Office. Its introduction in 2000 aimed to simplify the tax system, promote fairness, and provide a stable revenue source for the government.